Good morning. Welcome on our webinar. Today we'll speak about Poland as a digital pioneer in challenging tax fraud. My name is Marcin Sidelnik. I'm a tax technology partner in Tax and Legal Department, PwC. And today's webinar will run together with Tomasz Fabiański, director in Indirect team.
Good morning, everybody.
And happy to have you here today with us. So I'd like to engage you in active participation. So we'll have 2 questions during the webinar when we ask you to select one of the answers. And we also would like to ask you to ask the questions. We'll select some of them and we'll have time at the end. We'll answer them. So today we would like to focus on actually 2 key subjects now in Poland, which focus on VAT fraud and fighting with a tax gap, which is Sfty and split payment mechanism, which will be introduced in Poland. I will cover Sfty part of the presentation, and my colleague Tomek will walk you through the split payment regulations and ideas that will be implemented in Poland. So, starting from Sfty, we will ask you first to answer the questions. It will be good warm-up before providing you with a lot of, I hope, very useful information around that topic. So, for those of you that are not familiar with Sfty, Sfty is Standard Audit File for Tax, which is electronic way of providing data between taxpayers and the tax administration. So now I would ask you to answer the first question as a warm-up, and I will now read the question, and you will have some time to select one of the 4 answers. So, the question is, Polish taxpayers are already sharing substantial portion of tax-related data via monthly Sfty reporting. In your view, this fact does not create exposure, range of submitted data does not allow tax administration to make reasonable tests. The answer B is does not create exposure. Tax administration is not advanced enough to employ relevant analytics. The answer C does not create exposure. All data shared with tax administration are tested upfront internally. And the answer D is may and is likely to create exposure, requires actions to employ certain mechanism allowing to manage it. So now I'd like to ask you for selecting one of the answers as a warm-up, and happy to comment that. And of course the answer covers the situation in Poland. It's more your perception. If you don't have the right answer or you are not enough familiar with the situation of the tax administration in Poland, the efforts to fight with the VAT fraud and the usage of Sfty. It's if you don't have the answer, just select one of them. What is your perception? What do you believe tax administration is? How it's using the data from Sfty? How it is prepared? What do you think about it? How it looks like in Poland? So let's wait some time. I will not suggest any answers. I will cover that during the rest of the presentation. So I look at the rest of the team, if we are ready or not with the answers. So I suggest a couple of more seconds. I should see the special tick on the screen that we have enough answers. So one of A, B, C, or D. First of three are no exposure. The last one may and is likely to create exposure. You can refer to the articles in press, what you've heard about the tax collection in Poland. So that may give you some ideas how to answer this question. Okay, so I guess we are ready with the answers. I don't know the answers, so I will look at them just right now. Okay, so you can see the results. So the great majority, like 67% of the answer is may and is likely to create exposure, and quite a few, 33%, does not create exposure. All data shared with the tax administration are tested upfront internally. So I'm happy for those that have a procedures or processes prepared in a way that the data before providing them to the tax authorities are well tested. Still, this both answers can be actually true, and I mean that tax administration are looking at the data, are testing the data, and potentially it may create the risk once they identified discrepancies in that. And I will cover that during my presentation, showing some examples how the tax authorities are doing that. So thank you for the first question and for the first answers to that question. So as a warm-up, that's something we can build on and continue with the presentation. So let me jump into the presentation itself and the key information about Sfty. So Sfty is a quite big stimulator to digital transformation of taxes in Poland. It is not something that was implemented for the first time in Poland, or it's like a Polish idea. Sfty is used in many countries, a big trend we observe right now. More and more countries are implementing this type of the measures to enforce e-audit. That's the key goal for the tax administrations by implementing Sfty regulations, is to increase the effectiveness of the e-control. Having the data in electronic format is not enough. We need the structured data, and the tax administration needs structured data to perform e-audit. And that saves a lot of costs, that enables to prepare tests which are run on such a set of data. All data are exactly the same from each taxpayer. So it's a very powerful way of analyzing them and capturing the risks, potential mistakes, and fighting at the end of the day with VAT carousels and VAT frauds. And also it increased the effectiveness of such a control on the side of tax administration, but also in a longer term it can bring some benefits for the taxpayer, not to spend so much time providing information, hard copies of that information to the tax administration. So in a long term, such a audit should decrease significantly in time. And just to give you an overview of these regulations in Europe, so first country that introduced Sfty in Europe was Portugal 7 years ago, around 8 years ago. For VAT, first it was just on request, then after 2 years it became mandatory, providing data around VAT on monthly basis, and it's further extended to both in Portugal and further countries. Then it was Luxembourg, Poland 2016. Many other countries in Europe introduced kind of a Sfty-like rules to provide the data in a structured way to the tax administration. like France, like Germany, Slovakia, Czechia, and many countries are joining Sfty right now, which is Spain this year, Lithuania, Norway is joining next year, Serbia is joining next year, Italy is joining next year. So this is the key trend, and I personally have no doubt that it will cover more and more countries and more taxes, as the tax administration just need this type of the data. So why Polish Ministry of Finance is introducing Sfty? I'm sure that you must have heard about the issue, same like many other countries we have in Poland, as regards the tax gap, which is assessed at the was assessed at the beginning of introducing the Sfty at the very high level of almost 14 billion US dollars, and that was one of the triggers to introduce Sfty in Poland, to first of all reduce the cost of and the duration of an audit, and be able to effectively control both VAT and other taxes, and decrease the VAT gap especially, and fight with the tax frauds. In Poland we have both approaches. So Sfty is provided as a mandatory file for VAT and on demand as regards the rest of the structures. I will cover that later with some more details. And as I mentioned, we didn't reinvent the wheel in that area. So the Sfty was introduced based on OECD guidelines, and also in line with the structure of the file based on XML. Also, that story I would maybe share, referring a little bit to your question or to your answers, that the tax authorities were not potentially be able to use that data or not effectively use that data. That was one of the concerns when the Sfty was introduced. So Ministry of Finance decided not to base only on its own IT infrastructure to collect all this data, and they set up a cloud to which all the data are transferred, and between the cloud and the IT infrastructure of the Ministry of Finance, the data are flowing as fast as possible, not to make a troubles on the tax administration side, and collect that data effectively. So that's the I would say Polish way of dealing with such a great amount of data, and making sure that the Sfty will be implemented successfully. And that's actually happened, and now the taxpayers are sending all the data fully electronically to the tax authorities with a special interface built for that purpose. So who's obliged to provide data in that way? First of all, in 1st of July 2016, big taxpayers, which is around 6,000 entities, joined that regulations and were obliged to provide VAT Sfty on monthly basis, and rest of the structures on request. On the 1st of January 2017, small and medium companies have joined, and that would add another around 100,000 entities to provide monthly VAT Sfty on obligatory basis. And now, starting from the next year, literally all taxpayers, which are VAT taxpayers, will be obliged to provide VAT Sfty structure on monthly basis, which will mean that around 1,600,000 entities in Poland will provide data electronically using the VAT structure every month, which is a very powerful set of data, and I will prove that it is something which is already used and will be used much more extensively in the future. And the remaining structures, which are provided on demand, only on the request of the tax authorities, are already in place for only big taxpayers, and rest, medium, small, and micro enterprises will be obliged to provide these structures on demand starting from the 1st of July next year. So I mentioned a couple of times structures. We are speaking about 5 structures which are now binding. First, as I mentioned, is VAT structure, which is VAT register. That's the structure number 4, provided on monthly basis. And rest is accounting books, bank statements, warehouses, VAT invoices, which is literally around 400 types of information provided in that structures altogether. 4 of them, the last one I mentioned, are only on request. And as you can see, the set of data is quite broad, and it contains the data in a way, or provides the data in a way that without software or without generally special software, you are not able just to read them like you read the information in Excel or Word. They are quite complicated language, and for most of the tax advisors, for most of the people dealing with accounting, this data are not ready to be prepared, provided, and also read. All Sfty files covers 3 parts of data. That's a kind of a headline information, very general about the entity, enterprise itself. Then like substantive positions, which are the transactional data, very detailed data, and sums controls, which sums the data and aggregate them and provide the aggregated amounts. And that's the basic structure of each Sfty file. It's not my favorite piece of the information I'm providing. However, I cannot omit that, especially during such a presentation for you. So it's obligations and penalties once you fail to submit the Sfty file, both monthly or the Sfty structures on demand. So first of all, if you are not providing data on monthly basis for VAT at all, that may the maximum sanctions may reach to around 3 million Polish zlotys, which is around 700,000 euro. And if the taxpayer will provide not correct, false data in such a Sfty file, this is a double amount. As regards the Sfty on demand, if it will be requested by the tax authorities and the taxpayer decide not to provide them, consequently it may be treated as the action preventing performing the tax audit by the tax authorities, and in a really worst case scenario it may reach the amount even 5 million US dollars. In Polish zlotys it's 18 million zlotys. Of course, it's not it has not been in place so far. The tax administration implementing Sfty regulations announced that it will not focus on putting sanctions for not providing information on time. However, it may change at any time, and that's the law, and the maximum penalties can be as that numbers, as such a high numbers. And a lot of taxpayers are wondering if the tax administration is really using that data. It's a really huge amount of data. Now we have information from the latest statistics that it's now 13 billion of transactions, transactional data already collected by the tax administration, and it's actually used by the tax authorities. That's the statistics only from one quarter of 2017, and it shows that the discrepancies between data provided in Sfty reconciled to VAT declarations, any VAT declarations, both Polish VAT and VAT EU sales and purchases list, are quite big, and they will for sure grow in the future. Bearing in mind that the Sfty covered big taxpayers from the 2016, half a year. Now we have almost 1.5 years of being these regulations in place, and bearing in mind that soon all taxpayers will provide this data, and this number will increase by million plus entities. The tax authorities will have all the data in a chain of the transactions from the micro to big taxpayers, and I'm sure that if I will present that in a year time, these amounts will be much bigger. They're already quite big. So what are the biggest discrepancies? That's the discrepancies between VAT tax return and Sfty file. Although it should be exactly the same data, they are not. If we look at the numbers, there are discrepancies between data reported in Sfty and EU sales and purchase lists, quite a significant number. And also the findings of the taxpayers which were deleted from the VAT register. They are not no longer VAT taxpayers, or they issued VAT invoices, although they were never registered for, maybe not never, they were not registered for VAT purposes at the moment of issuing the invoice, which from the perspective of the risks means that the input VAT on the side of the taxpayer that is dealing with such an entity is at risk, may not be deducted. The Sfty itself, it's only just a piece of information, and when we look at the numbers and look at the numbers, especially focusing on fighting with the VAT gap, only based on data year to year from this year, the tax administration collected 30% of VAT more than the last year, which is really a huge amount. It's exactly 22 billion of Polish zlotys, which is around 6.5 billion US dollars. And partially it's thanks to Sfty, but also thanks to many other measures which are already in place or will be implemented. Split payment is one of them, which we'll cover today. But when we look at the all range of information which are provided to the tax administration. We're speaking about Sfty and other sources like tax returns, like other databases which register if the taxpayer is still active or not. Other structures which provide very detailed level information on VAT invoices, on the transactions with the within the warehouses, the payments. The data from Sfty are matched with data on from the transport process on the goods that were the movement of goods between countries, between taxpayers, and matching this data with the so-called send information. Also with the payments, which is called the steer, to be in place next year, which will result in providing many data on payments by the banks. There's a plan to do it on daily basis. So all that data will create a big lake of data on the tax administration side, which can be used much more extensively, and I'm sure that they will be used because tax authorities already created the tool which is called Sfty Analyzer, set up a special team in Wrocław that is dedicated to develop the tool, create the list of tests, add all the sources of information that I mentioned just on the slide, plus any other structured data which are available and will be available in the future, to actually better select taxpayers for the tax control and fight with fraudulent transactions. It's not that only tax administration is focusing on that. We also supporting the clients to help them in generation of Sfty files, analyzing them, and helping with understanding the regulations. So what we did, we developed our own application, which is called Taxolite, that helps the clients to gather data from any sources of information and generate Sfty files. It also covers preparation of the VAT declaration, settlement VAT declaration with the Sfty file, and also covers other functionalities to automate tax reporting. We also focusing on analyzing data from Sfty, same like what tax authorities do. We prepared the set of tests around 100 at the moment, focusing on a VAT structure to see and visualize using the tools which are dedicated for that purpose, data from Sfty files to do it on a real-time basis. So just to uploading this file before sending that to the tax administration and see the risks and discrepancies in Sfty file straight away. And also we supporting like on a regular basis. We have a consultants providing data, providing information how to understand data in the systems from the perspective of Sfty requirements, supporting the clients in we call it IT-based consulting, creating solutions, reviewing systems, and helping to transfer data and identify data which should be provided in Sfty files. So that would be it as regards the Sfty. I'm happy to look at your questions and answer them at the end of the presentation. Now I will hand it further to Tomek, who will cover the split payment mechanism in Poland. Tomek.
Okay, thank you, Marcin. Good morning again, everybody. As announced, I'll have a pleasure to walk you through the planned split payment mechanism regulations in Poland. So before I start, a few words of introduction, what the split payment really is. So basically it is a mechanism, a system which is developed in order to reduce or to eliminate the possibility of committing the most popular types of VAT frauds. How does split payment doing it? It's quite simple. So the split payment of VAT is around splitting the payment from a purchase invoice between two streams, the net amount and the VAT amount. And all the split payment systems in principle are about the situation, the model where the net amount only is transferred to the supplier, whereas the VAT amount is transferred, let's say, somewhere else. It may be the tax administration account, it may be, let's say, a supplier's account, but a special account to which the supplier has only a limited access to. So the usage of split payment ends up with the supplier not being able to, let's say, to fully use, to take advantage of the gross amount invoiced, but he only can dispose over the net amount. The split payment mechanism is commonly proved or commonly perceived as a very effective tool as far as combating VAT fraud is concerned. It is, however, not very popular in Europe. Why is that? So, first of all, the implementation of split payment costs a lot. I mean, the costs on the tax administration side. Second of all, it creates a lot of administrative burdens, both to the tax administration and the taxpayers. And last but not least, the principles of split payment mechanism can influence in a negative manner the cash flow position of the businesses. And it's because we are, let's say, putting the VAT amount out of the supplier's control, which can easily negatively influence the cash balance of the company. Before I will start our, let's say, journey with the Polish split payment idea, and before I will tell you what is the Polish idea how to handle these three areas which are typically seen as barriers for VAT split payment, I will note one more thing. We will be talking about the regulation which formally is still a draft. So the final, hopefully final voting in the Polish Parliament took place yesterday, and now the piece of legislation is awaiting to be signed by the Polish President. However, formally it's still, let's say, it's still being processed. It's still in the course of the legislation process. The most important, let's say, thing that changed yesterday during the voting is the entry into force date, which was postponed from April 2018 to July 2018. So the taxpayers have now about 6-7 months time to get themselves prepared for the entry into force of the new legislation. Okay. So what are the principles of the Polish approach towards the split payment? So of course, if a taxpayer will use the split payment mechanism, it will be around splitting the amount invoiced into two streams, into the VAT stream and into the net stream. The idea is that the net amount will go to the supplier's regular account, whereas the VAT amount will also go to the supplier's account, but it will be a special account, so-called VAT account. And what is natural, the supplier will have very limited possibility to use the funds which are accumulated or will be accumulated on his or her VAT account. In terms of the further principles of the split payment mechanism in Poland, the plan is that the mechanism will be voluntary, unlike, for example, the Italian approach where the split payment is mandatory for a given, let's say, type of taxpayers in given industries. In Poland, it will be a voluntary mechanism. It means that the taxpayers will be free to decide whether to use the split payment or not. This is, however, kind of a tricky assumption because this voluntarity will be remained at hands of the purchaser, at hands of the taxpayer who is receiving an invoice. So it will be his decision whether to split the VAT resulting from the invoice or not. So in practice, when you're a Polish taxpayer, you cannot really assume that if you will just sit and wait, you will not be affected by the introduction of the split payment mechanism because it's voluntarily. This is not truth, or maybe in other words, it's truth only if you are trading 100% business to consumer and your customers are not able to split the amounts you are invoicing to them. Otherwise, if you are trading B2B, you can be easily affected, your cash flow may be affected by the split payment mechanism because the decision whether amounts you are invoicing to your clients will be splitted or not will remain at hands of your clients. So the system is voluntarily, but it is the purchaser who is deciding whether to apply the mechanism or not. And if the decision is at hands of the purchaser to use the mechanism, the supplier has no mean to block such a decision. So this is around the matter whether the system is voluntary or mandatory. In terms of the manner the split will be taking place in practice, the Polish approach is that we will have so-called automated split payment. So it means that the purchaser who will be splitting the payment into two streams will be making only one bank transfer. The split will be performed automatically in the banking system between this VAT amount and the net amount. So the Polish system will be different here, comparing, for example, to the Romanian split payment, where the purchasers are making two separate bank transfers. In Poland, there will be only one bank transfer, so the payment will be executed more or less like it is now, with slight differences I will be covering in a second. The whole operation, the split of payment itself, will be performed by the supplier's bank. Okay. So how this will take place in practice? So the idea is that the Polish banks will develop a specific bank transfer notice dedicated to the split payment mechanism, and by using this specific transfer notice, the purchaser will be effectively executing the split of VAT. So in order to take advantage of the mechanism, it's enough that the purchaser receiving an invoice uses this specific transfer notice. This split payment notice needs to, or will need to contain a few elements which you can see on the left side of the slide. So the purchaser should include information about the VAT amount, about the gross amount, about the invoice number, and about the supplier's VAT ID. These are these elements which should occur on the special transfer notice. So, for example, if I will be receiving a purchase invoice for 100 plus 23 VAT, so 123 gross, I will be picking up this special notice out of the options, out of the payment options envisaged by my bank. I will be putting 23 as VAT, 123 as gross. I will quote the invoice number, the supplier's VAT ID. I will click enter, and that's it. By doing it, my payment towards the suppliers will be split, and 23 PLN will land on my supplier's bank account. Easy? Easy, good. So there will be, let's say, two drawbacks regarding the system, which looks really simple at the first glance. The first one, and in my view quite important, is that there will be no mechanism, or at least there will be no obligation for the bank to employ any mechanisms which will validate the split of amount between VAT and gross. So what the purchasers will be typing in the bank transfer notice will be outside of any, let's say, validation checks. Nobody will in practice employ that. So as you can imagine, it's enough that the purchaser will make a simple mistake and, for example, will quote VAT 123 instead of 23. The system will accept such a payment transfer. And referring to my example I was talking about a minute ago, if I will use this invoice I received and I will type VAT 123, gross 123, invoice number, supplier's VAT ID, and press enter, I will cause that the gross amount, the total amount invoiced, will be landing on the supplier's VAT account. And this is likely, in my view, to create a substantial amount of doubts, difficulties, problems, issues, at least during the first months after the system will be introduced. The second, let's say, not so happy information is that according to what the Ministry of Finance is saying, there will be a basic rule as far as using the split payment is concerned. And the rule will be one invoice, one bank transfer. So in practice, we will not be able to use the VAT split payment to a bunch of invoices. We will need to perform a separate bank transfer regarding each single purchase invoice. And this, of course, is something that the big taxpayers are not prepared at the moment. And this is something to be, let's say, taken care of. As I mentioned, the VAT which is splitted will be collected, will be stored on the VAT account of the supplier. So now I will tell you a few words about the VAT account itself. So regarding the opening of the VAT account, it will be automated. So the Polish taxpayers do not need to do anything about it. this will be performed automatically by the respective bank and without any additional fees, without any additional charges. So once the split payment is coming into force, you will have every Polish taxpayer will have his or her own VAT account opened by the local Polish bank. And it is just unlike the operations regarding funds collected on the VAT account, because all the operations will need to be handled manually by the taxpayers. It results from the fact that from the formal point of view, the funds stored on the VAT account still belong to the supplier. So if the supplier does nothing, the funds will be accumulating and accumulating and accumulating. So no automation here. We'll need to be able to effectively manage the balance of our VAT account. As I already told you, and this is of course the major principle of the split payment model, the supplier will be limited as for the possibility to use the funds which are stored on his VAT account. I will now briefly discuss what the supplier will be able to do with the money that his or her clients decided to split via the mechanism. So first and foremost, I would say, the supplier will be able to use this money to pay to his supplier via split payment mechanism. This is, let's say, the idea, the most important, let's say, factor that in the view of the Ministry of Finance, and this is, let's say, a fair assumption, I would say, may in practice limit this negative cash flow implications which are typically associated with VAT split payment. So if I receive VAT on my VAT account, I can use this VAT to pay to my supplier via split payment. In such a case, the state treasury still has control over this money, but my cash flow is not negatively influenced because I can, let's say, use this money to pay my own liabilities. Apart from this possibility, the taxpayers can of course use the funds stored on the VAT account to pay the regular VAT liability. They can ask for the refund of VAT resulting from the regular return on the VAT account. And they can also ask for the possibility to withdraw the funds from the VAT account to the regular account. But this last operation, of course, which is against the basic rule based on which it is the state treasury who holds control over the funds splitted via the mechanism, this last option will be dependent on the consent of the local tax authority. So if we want to have our money released from the VAT account to the regular account, we need to ask the local tax authority. They have 60 days to respond, and if they accept our application, then our bank is free to release the funds. Okay. Bearing in mind the fact that the mechanism is not obligatory, all, let's say, these operations, except of the withdrawal, of course, should be related to some incentives, some benefits for taxpayers for using the mechanism. What are they? The list of incentives is quite, I would say, limited, and currently in Poland there are, let's say, discussions mainly related not to what type of incentives are in the list, but there are discussions about the major incentive which is unfortunately not in the list so far. and it's related to the protection which should be gained, should be, let's say, granted to the entity paying the purchase invoice using the system, the protection against being accused on, let's say, committing or taking part in the VAT fraud. So what the business in Poland is heavily expecting from the Ministry of Finance is to provide at least a strong presumption that if you are using the split payment, you are showing due diligence, you're acting in good faith, and in case your supplier or the supplier of your supplier proves unreliable, then nobody will come to you and nobody will question the deduction of input VAT from the invoice you paid via split payment. So the Ministry of Finance in Poland is constantly saying that this type of incentive will occur shortly, but so far nothing in this area was, let's say, effectively provided. So when we are talking about the benefits, let's say the simple and the most relevant comment is that the real incentive and the most relevant incentive is missing at the moment. What are the potential, let's say, drawbacks in effectiveness of the system? This will be, let's say, more like a recap of what was already mentioned. So maybe one thing I did not tell you so far, I haven't told you so far, is that the split payment will be limited to payments in the local currency only. So if the settlements are in foreign currencies, they will be outside the scope of the application of the split payment. Only transactions in Polish zlotys may be accounted for using the mechanism. Of course, using the split payment will not totally release the purchaser from the obligation to verify the supplier. At least the fact of the suppliers being registered for VAT purposes should be still checked. The protection against fraud is missing, as I mentioned. The system, let's say, requires to apply this one invoice, one transfer rule, which will be for sure inconvenient for many businesses. And also the thing I already mentioned, this lack of validation may create some, let's say, maybe not create the room for mistakes, but it may cause the mistakes being very costly for the suppliers if the purchasers will be allocating the VAT and gross amounts in an incorrect manner. Okay, I think the time has come to ask the second and final question. So I will do it right now. And the question is, which area, in your view, may potentially discourage Polish taxpayers to use split payment of VAT in practice? Is it A, insufficient system of incentives, B, potential negative effect on the business partner's cash flow, C, organizational constraints, or D, costs of adjusting IT systems? So now we will have some time to answer this question. Marcin, what do you think?
What I think that the cost issue, both for split payment and generally any regulations that interfere with the systems, with IT, create costs. If it will be the main factor we see based from your answers, I will not give you only my opinion. I believe that there must be benefits if something is not mandatory to use that, and the costs of course should be lower than the benefits, and cost in terms of implementing any rules like that will come, no doubt, both in Sfty, implementation of Sfty, or adjusting the systems for split payment in the process, on the side of the taxpayer, on the side of the bank, but they will be born. So
I can easily agree with you. Let's see what what's the participant view. Cost of adjusting IT systems, 83%, and this may, let's say, sound tricky, as let's say the whole infrastructure, the possibility to use the split payment should be, let's say, borne by the Polish banking system. So everything should be prepared to use the mechanism. But I think that this answer is
probably most correct.
Yeah, exactly.
I remember. Maybe I will comment that. Maybe Tomek, you can have a look at the questions if you are able to answer at least maybe one, because we have a few. So I will let Tomek to maybe reflect on some questions and answer them, and comment the cost issue. I remember when Poland was introducing Sfty regulations, and there was some of the comments that it should not trigger big costs on the side of the taxpayers. I even heard some comments from experts from even tax administration that it will not be big. The tax administration will help taxpayers prepare the tax tool, the tools, and the cost will be even couple of 100 zlotys. The reality was very much different, and the cost of adjusting to the rules sometimes were even 100,000 zlotys. So it's worth to bear in mind that there will be a cost, and there will be probably higher, like in IT, than initially planned.
Yes, we will. Okay, the time will tell. But
would you like to answer a question?
Sure. So if you're asking about the criteria for the entities which should apply the split payment process, I will go to the next and the final slide. So basically the system is available for everybody, for all the, let's say, B2B bunch of transactions. Let's say, when I, as a taxpayer, should be interested in using the split payment. It's of course about, let's say, the benefits I can receive by doing it. So assuming that the Ministry of Finance will make its promise and will provide some protection against the risks related to the unwilling participation in VAT frauds, I would say that the group of taxpayers who should be interested most are the taxpayers who are acting in the industries which are, let's say, penetrated by VAT fraudsters. So if I'm purchasing goods that I know that have been or are used in VAT carousels, such as electronics, FMCG products, this is the tool I can use in order to assure that nobody will question my right to recover input VAT. The second question you were asking was about the possibility to apply the VAT split payments to batches of invoices. And as I mentioned, the time will tell. At this point of time, what the Ministry of Finance is saying is that there will be one invoice, one payment rule. So unfortunately, it will not be possible. And this is the fact that makes your answer to the second question relevant in my view. Because if you are using now, if you have the payment function automated in your processes, in your applications, then you will need to adjust the settings in order to be able to adequately pick up the transactions for using the split payment and to use it effectively.
Okay, so I think that brings us to the end of our today presentation. Thank you very much for taking part in that. Hopefully it was interesting, and we don't have too many English speaking presentations. It's dedicated to people that have hunger for this type of the information, but the language may be a limit, so we decided to run a few in English. We'll see how it will be developing further, and hopefully we'll see you soon again on one of our webinars. Thank you very much, and
Have a nice weekend.
have a nice weekend and Merry Christmas, because it's in a week time. Thank you.